Welcome back to episode 2, season 2 of Office Hours with yours truly, in partnership with the good folks of the Loft, the Luxembourg House of Financial Technology. Today, I want to talk about a great valuation reset that we may see on the horizon. For the past 40 years, since the early 80s, we have had an environment with interest rates relentlessly dropping down, all the way to near zero and sometimes negative in certain countries. This has made the job of investors fairly easy. When interest rates are low, it's super easy to invest and to take on risk, whether you do it with leverage or without leverage. This has made investors in funds in the private equity world and venture world like me being very interested in the type of returns that private equity and venture capital are providing. And so we've had 35, 40 years of very easy going for startups, funding startups, and then exit opportunities and great returns. Now we have inflation and the beginnings of an inflation that are starting to creep up. Real rates in most of the world are still negative. That's because you have inflation, but nominal rates are starting to be positive. And it's not going to take a lot more to have real rates that are actually positive. What does it mean? Last year, in November of last year, we already had a great reset of valuations in the public traded space, right? A lot of technology companies, SaaS and otherwise, tumbled and valuations were reset. That didn't mean that for early stage startups, there was also a reset from a domino effect. However, some late-stage startups felt the brunt of that public markets reset. My thesis, and that of others, is if we continue to have rates that creep up and we get to a point where we have real rates that are positive, we'll enter a brave new world that no one over the past 40 years has encountered and has experienced. This is going to mean that investing in startups, in private equity, and in venture is going to be drastically different. It means that a lot of people are going to find it much, much harder to invest and also to attract capital to their VC funds. So at the margin, there may be less capital available to the venture space and to private equities. And at the margin, it means that startups are going to find it also more difficult to invest. Net, altogether, in the aggregate, valuations may suffer. Hence, my view that we may be on the cusp of a valuation reset if inflation continues and if we start having positive real rates. So stay tuned, because this is going to be a momentous change for the entire innovation chain and startups, and for yours truly and all kinds of venture capital investors. Until then, goodbye and see you next time.